Good. Hey, Anna, we're doing a little volume test here. Can you hear me okay?
Absolutely.
Okay, good.
Can you hear me okay?
Yeah.
Okay.
We'll go with that then.
Yeah, that works well. Okay.
Thanks, guys. Thank you so much, everyone who's joining us for the webinar today. I really appreciate you being here. I know you have a lot of really great questions around PPP, and we have some experts here that are going to take all your questions. We're giving it a couple more seconds for people to sort of filter in from the waiting room into the webinar, and then we'll get started in just a minute. Okay, we'll go ahead and kick things off. My name is Anna Tausen. I'm the Chief Revenue and Innovation Officer here for the Texas Restaurant Association. Super glad to have you guys join us. I know we've been getting a lot of different questions via email and text and on our social pages about what to do about the next round of PPP funding. And I'm really pleased to announce this partnership with TransPecos Banks between us and TransPecos Banks. They have been highly recommended by several restaurateurs here in the state of Texas. And they are definitely PPP nerds. And I mean that with the highest regard. You guys have been really helpful for our members already. Before we get started, I just wanted to remind you that we are recording this, so I will make it available for people after we're done. Also, if you have questions throughout, feel free to ask them using the chat window or the Q&A window, whichever one is most convenient for you. If we're not able to get an answer to your question, we are recording the questions as well, and we'll get them to you. We'll get an answer to your question as soon as we can. We'll send those over to TransPecos Banks, and they'll be able to provide answers to them after the webinar as well. There is also a specific email address that they have set up for TRA members and non-members to use for support, and they'll share that with us during this webinar as well. That's it for housekeeping. I'm going to turn things over to our President and CEO, Dr. Emily Williams-Knight, who can talk a little bit more about TransPecos Banks and TRA. Emily?
Yeah, hi, Anna, thank you so much. Hi, everyone. It's good to be back. I feel like we first did this back in April, and now here we go on round two. I think, let me just start by saying one of the things you saw us advocate very heavily for was to get this next round of funding. We felt very strongly that where Congress was positioned, trying to get a direct relief bill was almost impossible. And so as hard as we tried, we knew we had to at least secure this round of PPP funding for you. There's a lot about it that's good for restaurants, but we also know that it's just an interim solution. So yesterday I was in Austin with Kelsey, and we began our state agenda and our lobby agenda as the 87th session opened. And we'll be back in January, mid-January in Washington, D.C. to get another round of relief for all of you. So today we're going to focus on how to take the most about this program, how to make the most of the PPP funding. And I want to be clear about two things. As we reflected on what happened in the spring, there were two reasons why many of you did not participate, or many of our restaurants. It was about 9% across the state that actually took out a PPP loan, which is quite small. In my opinion, I think we actually could do so much more. But the first was that many of you couldn't get a lending relationship. And the community banks, the small banks, they just did yeoman's work. It was remarkable to see what they did. And many of the large banks that some of our other members were banking with didn't actually participate at all. And so some of you were just left on the sidelines. And then second, well, there's a lot of questions about forgiveness. And many of you just were very nervous about, well, if I can't maintain my payroll, there's been so much inconsistency in the market. The volatility of demand continues, right, to ebb and flow. And not knowing that, especially for those of you that are in that like $50,000 to $100,000 loan range, that risk seemed too high. And so the second thing that's happened is that $150,000 threshold in this round and below, the forgiveness is a very, very simplified process. I mean, I like to call it a postcard. It's probably more about a 2-page process that you'll have to go through, but it's going to make that back end much easier. And so as we were reflecting and sort of talking through how we could help you, the notion was, what about a bank relationship? And sometimes life is just super fortuitous and works out really well for you. And Patrick Kennedy and I, who's the chairman of TransPecos Banks, and I connected. We had one conversation, and I realized that the scale that they have and the work they did in the first round was exactly the kind of work that we needed to have happen for our restaurants in the second. So we then, Anna and I got engaged with his team, who's fantastic, and started talking about, could we have a relationship that would allow our restaurants to not only get in line, right, but then to have top of the line customer support and care in order for them to make sure that all of you could go through the process, right? We just didn't want, hey, send your documents in and hope and pray. We really wanted you to have sort of what I call that white glove experience and be able to talk with you after hours and when you're available. And so as we worked through a very quick introduction and a lot of reference checks by some of my favorite restaurants and biggest restaurants. They couldn't say enough about TransPecos Banks and the leadership and the team. And so we formed this partnership really to make sure all of you can get access to apply for a PPP second round loan. And so I think through scale and technology and additional support, I think you'll see these this team and these banks is just a wonderful, wonderful partnership. So Patrick Kennedy, who I mentioned is chairman, I'm going to have him introduce his team, but definitely want to thank you directly for the vision of really getting this done. And I think we can make a huge difference for restaurants and really get them through this winter, get all of you through these winter months until we can get another round of relief, and more demand as this vaccine continues to roll out. So to the TransPecos team, thank you, Anna. Remarkable job pulling this off so quickly. And I'll turn it over to you, Patrick, for some opening remarks.
Thank you very much, Emily and Anna. We've been really pleased to be engaged with your team. And it's only been 1 week since we came up with the idea of how can we help the neediest businesses in Texas. And we thought, well, it's the restaurant business and the hotel business. And fortunately, we called on you all first. And you have an amazing team to be able to pull all of this together. TransPecos is, I would say, a tech-forward, almost 100-year-old bank that's headquartered in San Antonio, Texas, with years of roots in West Texas. And I say tech-forward, we were very, very focused on the PPP, the original round one, and using our affiliated technology company, Full Scope, which is run by Doug Hogan, who I'll introduce in just a moment, we're able to handle and process over 7,000 PPP loans during round one. So we're anxious to be able to move forward with this round and very honored to be able to have this partnership relationship with TRA and look forward to not only moving forward with the PPP round two, but many, many other opportunities to help the restaurant industry in Texas. So I want to next introduce my leadership on the tech forward space for our bank, my law partner and also business partner in the bank, Mr. Dub Sutherland, and then also Doug Hogan, who's the CEO of Full Scope, our technology company that assists in moving the bank process forward. So thank you very much.
Thanks, Patrick. So just in terms of topics, here's our agenda for this discussion. We're going to start out talking about the Paycheck Protection Program overview. Dub will talk about that. We'll also talk about key documents that you'll need to make your submission as successful as possible and as easy as possible. We'll talk about our process overall and what you can expect as you apply for your PPP loan. And then we'll finish up with some resources and how you can get help along the way, and as well as a Q&A. With that, I'll turn it over to Dub.
Thanks, Dub. So we've got some fairly dense content on all of these slides, and I'm not going to read them all to the attendees. I'm sure everyone's capable of doing that themselves, and a lot of it is duplicative of what we've posted on the TRA website in the FAQs. But obviously, we want to go over some of the highlights. We've got some questions that were provided in advance that we'll discuss as well, because those are good questions and answers that are very specific to the TRA membership. So we're in the PPP round two here, and we're going to be discussing, as Doug mentioned, two ways of going about it: first draw borrowers and second draw. First draw meaning you didn't get a PPP loan the first time. Second draw meaning that you did, and in order to be eligible, you either have already taken care of that loan, received forgiveness, paid it off, or will before funding of your second draw loan. And one overarching thought here, just based on a whole lot of experience in round one, is being organized is your best friend. We provide the FAQs, we provide the documents that need to be gathered, really to get a head start. Starting the application process, jumping out and jumping back in, it was inefficient for a lot of the borrowers, and it's tough to remember when you've got a day job and you're, as Pat mentioned, you're dealing with an industry that's the hardest hit of all because of COVID. it's tough to keep in mind what you need to gather. So whether it's you doing it yourself or you work with a CPA or others in the business that can help gather it, really going through these lists, gathering as much as you can. If you have questions, reaching out to our support team that can answer the questions, but being able to have that and work through that application as efficiently as possible in 1 to 2 sittings is probably the best. All right, so I think for most, if not all, of the TRA membership, I don't want to say all specifically just because I don't know, but everyone should be eligible because you're going to fall under the for-profit entities, and specifically called out, we'll touch on for certain reasons ahead, the NICS code 72, meaning that you're in food service and or hospitality. So, you know, you've got current economic uncertainty. That this one's probably a rather easy certification for any of the TRA membership to make, given what's occurred. And for first draw borrowers and second draw, you've got to be able to provide this. For second draw borrowers, that being the economic uncertainty statement. For second draw borrowers, there's actually going to be evidence of that you have to provide when you compare 2020 to 2019. Second bullet point on here, just something to point out, we've got 500 or fewer employees. Obviously, if you're in the restaurant business and you have a lot of locations, it is 300 or fewer per location. There's an exception, so you can ignore that for right now. Let's get the next one here. Okay, so first draw borrowers, payroll cost calculation. This is going to be different than your payroll cost calculation if you're second draw. For those who maybe attempted an application but didn't get funded in the first round, it's going to be the same as what you worked on before. So if you've got that information, you're probably in good shape. And so we've got a max of 10 million per borrower, but it's 2.5 times the borrower's monthly payroll costs. Take your annual payroll costs, divide that by 12, multiply that by 2.5, and you have your loan amount.
Dub?
Yes.
Hey, it's Emily. Real quick, one of the things that we really fought for was actually to get 3.5 times for restaurants, right? So they would that in this box here, if they're a restaurant, wouldn't they be able to do the 3.5 versus 2.5?
So the 3.5 comes in on second draw.
Okay, so as long as it was second draw. Okay, I just want to make sure because we're getting a lot of emails about is it 2.5, 3.5? If I just want to make sure they understand this part. Okay.
And we have actually reached out to the SBA to confirm all that, but the way the legislation was drafted and based on the interim final rules that have come out, its first draw is 2.5 times up to a $10 million cap. And for your membership, obviously, here on second draw loans, it's 3.5 times with a $2 million cap. Perfect.
Thank you.
Yeah. So same idea behind the calculation on payroll cost. 12 times the average. We're going to get into some specifics. We had some questions about restaurants that started in 2019, so they don't have a full 12 months and what you can use. And I'm going to get into that into the FAQs to put a little more color on some specific examples. But broad strokes. Take your 12 months, multiply that, take your 12 months, divide that by 12, multiply it by 3.5. And if it's under 2 million, you're in great shape. If it's over, you'll be capped out at 2 million.
Okay, thank you.
All right, so these are some of the slides that I'm not going to read in their entirety. There's a lot here. And so we took this direct from SBA material. So you've got 2.5 there, but remember for payroll costs for NICS code 72, it's going to be 3.5 times if this is your second PPP loan, your second draw loan. So a lot, what I can say about the payroll costs is, they did a good job, I think, of being all encompassing. When we get into the documentation, you're going to see one thing I will point out, if we've got self-employment, if you're operating as a sole proprietorship, independent contractor situations like that, there are things, if you as a restaurant have independent contractors that are working for you, they will need to apply separately. And so that was something we ran into a lot in the first one. It was unclear actually in the first round of PPP there for a while, and then the SBA provided clarity. about halfway through. So there was a lot of cleanup that had to occur, but that's something to be aware of. But when we talk about the required documentation, that should help clear up what you need to do to document your self-employment as a restaurant owner, or what you can provide to anyone that works for you that might be an independent contractor. So anyone, principal place of residence outside the US is not eligible. If you have compensation or employees have compensation that are in excess of 100,000 on an annualized basis, you're capped at the 100,000. The federal employment taxes imposed and your sick leave are all excluded from your payroll cost calculation. Eligible proceeds, what you can use, we refer to it, eligible loan proceeds. And we have two buckets. We have our eligible payroll costs, and then we have eligible costs that are non-payroll related. And so again, it's pretty expansive. I think what we do know is we got some expanded eligible payroll costs, non-payroll costs, which was great, because I'm sure there are restaurant owners that these will cover. And just to talk a bit on forgiveness and understand the difference between payroll cost and non-payroll costs and why that's important. To be eligible for 100% forgiveness, you as a borrower will need to spend 60% or more on eligible payroll costs. That's checking box 1 to be able to be eligible. Then you've got 40% that you can spend on other things. As long as those are spent on eligible non-payroll costs, again, assuming you didn't, if you spend 100% of it on eligible payroll costs, should have started there, you're all good. You're going to get full forgiveness. But if it's 60% is all you can get to, at least you've checked that box. 40% need to be spent on the eligible non-payroll costs, and you're then eligible for 100% loan forgiveness. If you don't have eligible non-payroll costs to make up that 40%, then that would reduce your forgiveness percentage or amount pro rata. So these are expanded, the covered worker protection expenditure. So wish I thought of this the first time, but obviously PPE, I'm sure, has driven up restaurant costs and purchases. That is now covered. The covered operations expenditure. This was clarified. It was a little bit soft in the first round. So glad we got some clarification here in terms of cloud computing services and deliveries, payment stuff. I mean, all of that. It wasn't quite clear. I think a lot of people did include that in eligible costs, but now it's explicit. And then property damage. Unfortunately, through the pandemic, this is a reality in a number of locations. And so if you had that occur, then that's something that can also be an eligible cost. So non-payroll costs, these are the same as round 1 for those who are familiar with that. You've got your rent. I will touch on in a little bit an affiliated rent question that came up. That's a good one, and clarify that. Your utilities, self-explanatory in there, and then interest on your mortgages or loans on real or personal property. So the important piece to remember here is that indebtedness, that loan, needed to exist prior to February 15th of 2020. So the documentation, when I was talking about being prepared, this is a big part of what I meant. Gathering these documents, making sure they were in final form. They're the ones that were submitted to the IRS or in your payroll reports, making sure that it's something that has the detail, but also the summaries for whatever time period, whether it's annual or if you were in operation less than a full year in 19, that it captures all of that information, these payroll reports. The more organized that is, the easier it is to see where the payroll costs came from. Really, those 940s are your best friend when it comes to that. If you've got them, then this makes it easy for the bank to be able to conduct its underwriting, agree on with you, hopefully on the loan amount, and get that moving through the system. This was the single biggest holdup. Well, that's not true. Lack of documentation was probably the single biggest holdup and or reason for application not getting all the way through. Secondarily, was just lack of the final documentation we needed to match up the payroll costs that the employer, the borrower, was providing with that the bank could document. Bank has to be able to document those amounts. They have to come from credible sources. Tax documentation is great. And then obviously the payroll reports from hopefully a payroll system, from QuickBooks, from something like that. But if not, then something that can be attested to as an accurate payroll report. Other supporting documents. Now we have for second draw loans, we have to document that you had a revenue reduction, a gross receipts reduction, gross receipts reduction from a specific quarter in 2020 as compared to 19. So in 19, I did, 50,000 in Q1, and in Q1 of 2020, I did 30,000. I had a reduction of 20,000. I qualify, and we've got to be able to document that. So again, QuickBooks statement, whatever accounting software is being used. Gross receipts may come from point of sale most easily to be able to document, whatever that is, but just making sure that we've got that and understand where it came from when you're providing it to the bank so that the underwriters can see that and support the reduction.
Hey, Deb.
Yes.
Hey, so we have a question sort of related to this from Pablo in the Q&A window. I wanted to read it to you. He said that we do our books using the cash method, and using that method, we barely missed a 25% loss because we carry receivables that help us a little during COVID. But if we use the accrual method, it shows losses between 37 and 28% depending on the quarter. Can we use accrual losses for the second round of PPP?
I don't think we know the answer to that. If someone's on, so the SBA is running the program. We're using some IRS documentation. I know there's an impact. The IRS cares whether you use cash or accrual. And so that's something we can take back. We'll capture that one, that question, and we'll reach out directly to the SBA and get an answer.
Okay, perfect. And Kirsten Maitland, I see you have your hand raised. I'm going to allow you to talk real quick if you have a question you want to ask.
Yes, can you hear us?
Yes, we can hear you.
Okay, perfect. We have a predicament where we weren't open for a full quarter in 2019, so nothing to compare. We opened in November 1st, so we missed all of October as far as fourth quarter of 2019. And then in 2020, we closed first week of March, so we don't have a comparison to go after on 2020 either.
And you did get a first round PPP loan? Did you get a PPP loan in the first draw in the first round?
Yes, we did.
Okay. That's another one I'm gonna have to ask specifically in terms of missing a full quarter, and see what the SBA says on that. Unfortunately, when they provide the final rules, there's just not all that specificity.
Okay, perfect. Yeah, we weren't open for anything to do a comparison in 2019 for a full quarter and 2020.
Okay.
So
We're going to capture all these questions as well as post them on the TRA website following this, though, just so you all know.
thank you so much.
Thank you.
We'll follow up with you guys. Thanks. Okay, Doug, we can continue.
Okay. Yeah, and just the last piece on there was entity documents. Just, we're not asking for a lot here. This is, if you're applying for a standard loan, it would be a lot more. But having those formation documents that were filed with Secretary of State, we got to make sure you're a real business, know it exists and was filed is important. So.
Hey, Deb.
Yeah.
Sorry to interrupt you again. We have a really good question from Mark, and it was kind of a basic one. I want to make sure we cover it before we move on. But he said that you mentioned that for first-time borrowers, they have to be forgiven before being able to apply or fund the second draw. Is that correct? Did we hear that correctly?
They have to have used the funds. All those funds have to be exhausted. Sorry if I say that. Yeah.
Okay, thank you.
I went through some of this when we were discussing the eligible expenses. So you can see, how much is going, if we're targeting 100% of loan forgiveness. Obviously the last bullet under the first heading with 100% of the PPP, got to have at least 60% used for payroll costs. So if you do that, then you've got, your laundry list there below. Spend your 60%, and then these other items that were provided in more detail earlier on, as long as you spend that 40%, all of those are eligible expenses. And just the way to think of it is, when you talk about eligible expenses, whether payroll or not, it means eligible for forgiveness. You can spend it on something else. It just won't be eligible for forgiveness if it's not under one of these two buckets. And then one other point here, you've got 10 months from the end of the covered period to apply for forgiveness before you'd have to start paying it back. And once you submit, lender's got 60 days to decide. And for those that are under, where your loan is $150,000 or under, we've got the streamlined forgiveness process and application, which I can tell you from having worked forgiveness, or having the team work forgiveness early on, really is a blessing. And so if there's a hesitation or fear around what it might take to get forgiveness, if that's a major deciding factor here, and it's $150,000 or less, that process is much improved.
And you just covered that.
Yeah. So this is, well, it's dated as of now, right? We just got an update that TransPecos, as a community bank, meaning $1 billion in total assets or less, we will be open to accept applications on Friday. We've obviously already been open. We've been open taking applications. We will be able to submit those to the SBA. So if we had someone that's kicked off the process already, and we had all the information that we needed, we at the bank would be able to submit that to the SBA for an authorization number and approval on Friday. So we have a window here where other larger banks, any bank over $1 billion in total assets, would not be in it. So we love that. We'll take all the head start we can get. And there's a specific allocation, just while we're on this, there's a specific allocation to banks that are 10 billion or less. So we're in a good spot with TransPecos as far as trying to grab as much of the PPP for TRA members as possible. And then this thing closes out March 31st, or the sooner of running out of funds, if that occurs. That happened in the first round. We worked furiously to get in as many as we could. So we like having this head start that I just mentioned, and would encourage anyone that's here and thinks they might want to go ahead and get started, get the information organized, and submit it into the portal as quickly as possible.
So we have some questions related to that, Deb, in the Q&A window too. And Marty was asking, during the first draw, of course, there was a mad scramble to get your application in. And that's one of the reasons why we wanted to create this relationship with TransPecos Banks. We know there's not a requirement that they need to be customers of yours to apply for PPP through you. But we just wanted to have one place where people could go and access, all their PPP questions and apply for the loan. But about the PPP running out of money, I know that that's a question that's come up a couple times recently. Do you have any thoughts on the risk of PPP running out of money, and how restaurants should balance that risk against the goal of using the employee retention tax credit for Q1 and Q2 of 21?
Unfortunately, I really don't. I mean, second round, we get the refunding, the re-upping of the PPP in round one went not fully utilized after the mad dash in the first, and I just don't know what to expect in this round. So we will push hard as we can on our end, but employee retention tax credit, I haven't worked through those numbers. Familiar with it, we've shared it with some where it doesn't make sense for them to try to use PPP, but I can't say that I know the math. We could try to look at that, but it may be a more independent calculation for each restaurant owner. So I can't say which is actually better.
And Deb, it's Emily. I'm going to jump in real quick because this is something that came up. We work with our team in DC, and one of the things they said is that they may not be mutually exclusive. So employers who received a PPP may still qualify for the ERTC on wages that are not paid with forgiveness funds. So just something to think about is it may not be one or the other. You may have an opportunity, depending on the size of your business, to actually have both. But Deb, I'm with you. We have a hard time right now projecting how many people are going to jump in, how quick it's going to go. And so, I think my recommendation would be, if you're thinking about this, then you should at least apply and work with you all, because what you don't want to do is get locked out. And I think you all remember what happened last time is the banks did this extraordinary job processing, but once SBA hit a threshold, you may be on the, on the outside. And so we don't want that to happen, which is why we're trying to drive this sense of urgency, why people are trying to scramble to get stuff. We want to make this super easy with this partner to help you get through and make sure that if you do want to take these funds that you can get them.
Absolutely. Emphasize everything that you said there. I mean, that's it. Put yourself in the game, at least have a chance.
Right.
And thanks to your leadership, TRA's leadership, and being here and moving so quickly, you've got a partner that's, sitting with one of the first shots to start putting in applications on Friday or gathering authorizations on Friday. So we've got as good a chance as anybody, a head start and a special allocation given who TransPecos Banks is size-wise. So we will do everything we can on our end to make sure that we get as many dollars out the door as possible.
With all that said, let's talk about our process and how you can go to start applying. So if you go to the TRA website, you can see here that green arrow under operations. You want to go there and click apply for a PPP loan. And what that'll do is take you to this pre-qualification form. It'll just qualify you. So you want to answer these questions, yes or no. Were you open before, in operation before 2/15/2020? One question that I want to draw your attention to that's important for us in processing is that last question at the bottom. Has this business received a PP loan at a different institution? If you have, just click yes there, and that'll make sure that we get you down the right process. From there, once you complete that pre-qualification application, you'll get an email into your inbox. And it'll be a few minutes after you submit, and this will tell you, hey, look, we've received your submission. Here's your username for our borrower portal. And you can go and click here to go to the borrower portal, and you'll create a password and log in. And that's where you'll start your application. So we've got a really robust PDF step-by-step documentation up on the TRA website. I'll show you where that is, which shows you explicitly step-by-step how to apply for the loan. But generally, this is what you need to know. Expect that email, and then be prepared to kind of log into the portal and submit your application. This is really more how the sausage is made on our end, our processing team and what they do. So I just kind of talked about step number 1, pre-qualification. As soon as you submit your application, it goes into our intake process. And that's when our team will begin immediately reviewing your application. And you should expect through the portal, they'll communicate with you via chatter and let you know if you're missing any documentation that you might need and kind of make sure that you have the right documents uploaded. After that, we'll take it through underwriting on through documentation. At the documentation stage, we're preparing the documents for you, the loan documents, and then we'll send them to you via email and notify you that you can e-sign your loan documents. And from there, once we get your e-signature, we can go and fund and book the loan. It's important. Here's the TRA website. I'll just direct your attention. When you have questions as you're applying, we've got a dedicated team working day and night to make sure that you have the support you need at TRA. So this email is trasupport@transpecosbanks.com. If you have questions along the way, please use that. And also please go to the TRA website where the team has really uploaded a lot of great content, how to apply, FAQs about the first draw, as you can see, FAQs about the second draw and permissible uses. That how to apply, download how to PDF is what I referenced in terms of the sort of application instructions. We hope that you find it all very intuitive, but those instructions should be pretty helpful for you along the way if you have any questions. And with that, I think we can open it up to Q&A.
Great, Doug. Thank you so much. And we definitely do have some great questions in the Q&A window. I'm just going to start with the first one, Nicole. She had a good question on, can you use different quarters for each location in the calculation, or is it as a whole?
So, yeah, and I've got actually the first one here is a similar question. I'm going to read this and we'll see if that addresses it, and we can discuss a little more. So the question that came in before that similar was, do there have to be at least a 25% reduction in gross receipts when comparing corresponding quarters in 2019 and 2020 in all 4 of the quarters, or can it only be 1 quarter out of the 4? And to give you the answer, and I apologize for having to read this much, but it's somewhat of a thorough answer. A borrower who was in operation all 4 quarters of 2019 and 2020 has the option to compare its annual revenues to its annual 2019 revenues to its annual 2020 revenues. Reasoning here is that a borrower who experienced a 25% reduction in annual revenues in 2020 obviously experienced at least a 25% reduction in revenues in at least 1 quarter of 2020. However, in order to be eligible for a second draw PPP loan, a borrower needs only to have experienced a 25% revenue reduction in 1 quarter of 2020 when compared to that same quarter in 2019. For example, a borrower with gross receipts of $50,000 in Q2 of 2019 and gross receipts of $30,000 in Q2 of 2020 is eligible for a second draw loan because it experienced a 40% reduction in revenue when comparing Q2 of 2020 to Q2 of 2019.
Okay,
So
Dusty.
you don't get to pick your quarters to
Right.
compare. They've got to be quarter over quarter, year over year, 2019 to 2020.
Okay. And Jenny is asking a question in the chat window too, related to her 2 businesses. And can she use TransPecos Banks to help her with a PPP loan for a non-restaurant business?
Yes.
Great. Good. Yes, please, Jenny, go ahead. But please go ahead and use the link that's available on the TRA website so they know who you are and where you're coming from, so that you'll still get the good treatment that all of our members and non-members are getting.
So I've got a second question here that, again, I'm going to read related to the same kind of quarter question. It doesn't answer the question we got during the webinar regarding I wasn't in operation for a full quarter, the full 4th quarter of 2019. What do I do? But it does discuss partial operation in 2019. So the question went this way: purchased the restaurant in mid-May of 2019, only 6 weeks of Q2 2019 sales. So can I use Q3 2019 as my reference quarter instead? How do I calculate my loan amount? My highest loan amount is, and this is the second part. So let me start there. Revenue reduction requirement. Yes, borrower can use any quarter of 2019 as its reference quarter when calculating its revenue reduction. A borrower need only to have experienced a 25% revenue reduction in 1 quarter of 2020 when compared to that same quarter in 2019. So if all you have is the 1 quarter, there's a reduction, that still would work, assuming it meets 25%. It doesn't, again, answer the question about if you weren't in operation for a full quarter in 19, and we'll work on that one with the SBA. Second part of this one was, my highest loan amount is using 2019 payroll costs for the 7 months that it was in business in 2019. Can I use this, or must I use the 2020 full calendar years to calculate, or can I add 19 and 20 together and divide by the 19 months? So calculation of loan amount here, when looking at payroll cost, borrower's maximum loan amount is calculated by determining the lesser of, and we're talking first draw when I say 2.5 times. 2.5 times the borrower's average monthly payroll costs and $2 million. So on second draw borrowers, PPP second draw borrowers can calculate their average monthly payroll costs based on calendar year 2020, or you can choose calendar year 2019, or the 12-month period immediately preceding the date of origination. So as we roll into 21, you even have that option. However, borrowers cannot combine 19 and 20 when calculating their average monthly payroll costs. I think the answer regarding 19, since you can select that, is that you could. I don't know if, so you could take, so whoever had this question, you could take your 19 payroll costs that were only 7 months, but then divide that monthly cost by 7 and use that rather than having to use full calendar year. But this is one, again, where we're not going to have a specific answer. Again, we'll keep feeding these to the SBA and see what we can get answered timely. But right now, I would say based on round 1 of PPP, we were able to take a truncated year. We were able to take less than 12 months, and you just obviously adjusted that calculation to account for payroll cost averaging over 6 months, 9 months, 10 months, whatever that was. Next question that was asked was, is the rent that our restaurant pays to our real estate entity that's an affiliate forgivable? The answer is yes. Rent paid to an affiliate is forgivable so long as the rent paid was obligated under a leasing agreement that was in force before February 15th, 2020. Qualification questions, I think we've probably addressed those. Again, here, if you're a member of TRA, you're in the restaurant business, you're going to be the NICS code, NAICS code 72, and would qualify. Relevant question, can canceled catering contracts be used as proof of loss of business? Unfortunately not. We're looking at gross receipts, not potential business that was lost. So if you're using that in a second draw situation to show a reduction in gross receipts, it's not going to work. It's obviously clearly, if it's a first draw loan, it shows you're clearly impacted if that works for you. This is one that I'm sure we'll get more of, and so I'll touch on it, and there's still not a complete answer here, but the question was, for purposes of the revenue reduction requirement, are the revenues of the borrower average with those of its affiliates? In this meaning, we have two situations here. I'm a restaurant owner and I own multiple concepts that are separate entities. Each entity in that case. So I've got restaurant A and restaurant B, and yes, there's affiliated ownership, but they're not, under the same entity, the same corporate entity, the same business name. Then the gross receipts are not aggregated. Each of those entities has to independently satisfy the revenue reduction requirement. You don't get to aggregate different businesses there. What we're trying to find out though is, people have asked, if I had locations that did or didn't, whether or not that would qualify, meaning that if you have more than the employee count allows, the 500 employees. So I've got one location with 300 or fewer employees, a second location with 300 or fewer, maybe I have a third location, and with that number, whether or not you can separate that for affiliation purposes. You aren't disqualified, because you have 900 or fewer employees, and so you're over the 500 number. So you get to look at each individual location and obtain a loan based on the payroll costs at each individual location. There's a question then that comes in about, how do we treat the gross receipts if one location didn't meet the hurdle but another did? So are they taking all the affiliation together? Are they parsing it out separately? The SBA gave, for TRA members, a great opportunity, given that you can break it out by actual location rather than one large, restaurant business, franchise business that has 1,000 employees. That being said, we don't know how they look at the actual gross receipts and the reduction in those gross receipts. Do I have to break it out per location, or is it just that business entity that owns those locations? So that's one that we've got to run down as well. One question I'll go into, this is a business question, not a technical question, but it's a good one nonetheless. And I'm not going to say there's a perfect answer, but it was, should I apply for a PPP second draw loan with more than one bank to increase my chances of getting the loan? We don't think that's a good idea. There were some issues that occurred in the first round where people applied at multiple locations. And, while we'd love it if the SBA system was immediate, real time, and we knew that you'd already received a loan, it doesn't work that way. And so there were a number of duplicate loans, which it's not fun to have to pay back and give back the money, and it's not fun to deal with the SBA in that situation. So when it comes to, I know there's been a number of questions in the chat about, should I use my existing bank or TransPecos for a second draw loan? If your existing bank was efficient and they got it done and they know you, there's no doubt that's probably the easiest path to go through if they're responsive. If they're not responsive, or they're not doing second draw PPP loans, then absolutely come into the portal and use it. We just want to make sure you get the result as quickly as possible and the relief that you need. So if you've got a clear path to that, whatever it is, take that. And obviously, if you don't have a relationship or it wasn't good on the first round, then TransPecos is standing by and happy to jump in and make sure that the loan gets funded. That's the list of FAQs that came in beforehand. So, Emily, if any more popped up that you want to cover.
Sure. Deb, there's a couple more. This is Anna. One is a pretty easy one. If this is the second round, do we have to apply for forgiveness before we can apply again? You said that we had to exhaust all the funds, but do they have to apply for forgiveness before they can apply for the second round PPP?
The funds have to be exhausted, but I don't believe forgiveness has to be applied for. And I'm going to double check that. I read that when it first came out, but let me post that one. I'd be able to chat it and get an answer right now while we're talking. I know the funds have to be spent before you can apply, but I'm not sure if forgiveness actually has to be applied for. I didn't believe so.
Okay. While you're doing that, the next question from Christy, she's asking about forgivable uses, permissible uses and what's going to be forgivable. And she's asking what supply costs are included in the forgiveness calculation. Is it strictly PPP expenses or any inventory items? She's asking about perishable goods, that kind of thing. I know, Christy, if you go to that website that you're kind of looking at right here, txrestaurant.org/PPP. If you scroll down into permissible uses, it gives you a really good list of everything that's available or to you. And I know that some vendor payments were included in that, Deb, but do you want to cover it in case I missed anything?
Yes. Yes. One second here.
And I'm going to post the permissible uses link right here too, Christy, in the chat, so you can see it. And if you click that, it'll take you right down to where you can look at all the different permissible uses that you can use for forgiveness for that 40%.
Yeah, that's the answer, I think, to most of the specifics that Christy was asking about are all eligible non-payroll expenses. I know perishable goods are explicitly called out. PPE is, but yeah, rather I don't know whether it's a good or bad thing, but I can't quote them all off the top of my head.
There's quite a few in there for this one, which is great.
The good news is, I mean, seriously good news for TRA members. That expanded use is stuff that really matters, stuff that y'all are spending money on. So I would direct you to that. Look at the permissible uses document we put together. It's pretty plainly stated in there. If there are specific questions within that, happy to come back and try to answer those, but that's probably better than me trying to answer it. Based on what's posted in the chat, the answer is yes, those qualify.
Great. And then remind us, since we're talking a little bit about forgiveness, the time period for forgiveness calculation and use of the funds. JD's asking, is that 24 weeks, the same as the PPP the first time?
Yeah, they call it the covered period, as they call it, is 8 to 24 weeks. You pick your window in there. I mean, it's a funny way that they set that up. I just look at it as I've got 24 weeks, and that clearly kind of matches up with if your payroll costs are somewhat similar, 2.5, you're under that. I mean, that should give you enough time to run that out, especially when you add in the other eligible uses. But yeah, 24 weeks, you need to exhaust those funds to qualify for full forgiveness in that time period.
Great. Now, Deb, I'm going to get into some more specific questions. So Kesha, thank you for or Keisha, I'm sorry if I'm pronouncing that incorrectly. Thank you for your patience on this. She has a very specific question on her restaurant, and she's asking if you can please explain how a restaurant that experienced high turnover in 2020 and lost several employees, of course, when they were forced to reduce to takeout only, but they also hired several new employees once they reopened. How do they calculate the wage reduction percentage for forgiveness when there's been lots of turnover?
It's the simplest way I can think to explain that is you've got the overall payroll calculation.
Mm-hmm.
You got your 940 and your 941, and it's taking those numbers and using what's stated on that. It's not about the individual person's or number, but just taking those gross numbers paid out in terms of payroll costs. Take your payroll cost and run your comparison that way at a dollar level, not a.
I think that's what she was looking for, Dub. And Keisha, let us know if that's not what it was, but it really is about the dollar and the amount spent on it, not the individual person or the individual role. So just think about it that way, but let us know if that doesn't answer your question. Next question on here, Dub, is from Mark, and he's asking about what if they borrowed funds in the first round around $100,000 and they used the funds appropriately, but their net loss was only 25K. So they still have 75 in the bank. And I know you've touched on this before, that they have to exhaust all those funds before applying for the second draw. But is there anything that Mark can do on that? Or does he need to, go ahead and exhaust all 100,000?
Yeah, it would have to be exhausted. You need to get those funds spent.
Yep.
And to clarify, I just got a response from the Triple P team at Kennedy Sutherland, and
Oh, for which one? Which question was that for?
The exhausting of funds. We don't
Okay.
have to apply for forgiveness. It's going to have to certify that you spent the round one funds and those are gone. So
That's where you can apply.
Yep.
Okay.
Yeah, and you can apply now and exhaust the funds before we fund the next loan.
Yep.
So, if that 75,000 sitting there and those funds can be spent in the interim before you apply again, then that works as well. It's just before you get funded for a second draw, the first draw money needs to have been spent.
Great. And then Richard's asking about some documentation on can he use the sales tax forms that they filed with the state for their year-over-year comparisons?
Okay. Yeah. So I think that probably is okay. I mean, that's, if you're willing to attest to that. And all I could think is the underwriters may ask that, put that into a very simple spreadsheet and say the same thing, take those numbers, copy and paste them over and show that and probably throw a signature on it or, attest to the fact that that's accurate. But tax documents work for other. I don't know that it's not called out specifically that that's applicable, but it's a believable source of information. And that's really what we're looking for in the underwriting process, is the reasonableness of that information. So that should work.
Perfect, Deb. Thank you. I know that we've exhausted all the questions that were in the Q&A window and the chat window, I believe. If any of you have other questions, please go ahead and add that to the chat and Q&A window. But then I just wanted to sort of reiterate while you guys are asking any additional questions. I know that the application is open now. People can certainly go ahead and apply using the TransPecos Banks portal. Please feel free to do that, even though it's Friday, right, guys, that you're going to be able to get those to SBA.
That's correct. Our first ability to submit will be on Friday to the SBA. But yes, please go ahead and start applying.
Great. And one of the great things too, and I know Emily mentioned this earlier about being able to use TransPecos Banks, is that they have agreed to provide additional customer service support during this time, including, going above and beyond just their normal 9 to 5 hours. I can attest these guys are available all weekend, after hours for sure. So if you have other questions, feel free to use that TRA support at transpecosbanks.com, or you can reach Emily or I. I'll put my email address in the chat window too. We're happy to take your questions and try and answer them, or just get you over to the experts quickly as well. But they have been really wonderful in terms of getting the right answers back. And if they don't have them, even though it seems like Dub has a brain trust behind him of all this great information, he has access to some great people at SBA, so he can get some questions answered for us too. Gentlemen, anything else that you wanted to add before we close today?
Nothing for me.
No, Anna, I think I'd just add that you mentioned the calculator for the loan amount, and there is a loan calculator in the application as you go to apply. That should be a helpful resource for everybody.
That's great. Okay, perfect, Doug. I'll make sure that people know that there is a calculator available for them to use. That's one thing that we did get asked a lot during Triple P round one. I'm trying to stop saying PPP and start to say Triple P. That does sound a little bit better. So we like that a little more. Great. Well, you guys, I don't see any other questions in the Q&A window or the chat. Deb, Patrick, Doug, Royce, everyone over at TransPecos, thank you so much. Emily, thanks for bringing this partnership around so quickly. This has been really great. We will post this recording in the next hour. And if you have any other questions, please use those email addresses that I provided to follow up. Okay.
Thank you.
Thanks, everyone.
Thank
Thanks,
you.
guys. Take care.
Bye-bye.